Guys, welcome to our top 4 stories today for 4 p.m. Eastern time. We have 3 stories to talk about and 1 stock to go through. Stay tuned for everything. Let's go to the first story, something from Michael Burry. Big short investor Michael Burry says falling stocks are Trump's kryptonite in the Iran war, and I agree. What he's basically saying here is Donald Trump's greatest weakness is his fear of falling stock prices, Burry says. Well, guys, I see Trump has all of a sudden gotten really big into Bitcoin and crypto. He wasn't before. Now he is. In my HBO debut, where my voice was used in that Bitcoin a documentary where I said Bitcoin's a fucking scam. It was either right before me or right after me. They had Donald Trump in there criticizing Bitcoin, I believe. Now, in order to justify liking Bitcoin, you have to be somebody who cares only about price, not about value. Donald Trump only cares about price. Stocks going down. If I were going to run for president, I'd say to people, guys, I am going to have no effect on the stock market. Valuations are where they are. I'm going to make policies that are going to try to make business better and easier for the United States of America. But where the stock prices go in the short run, I have no idea. But all these people think that presidents are the ones that determine stock value. Guys, wherever the presidency was when valuations were set in place, I'm willing to bet if they were in office for 8 years, the corresponding returns would jump into place there. So when Trump took full credit for his first term and having all the stocks go up, I laughed about that. It is what it is. This is what politicians do. But I think Burry is correct that falling stock prices is Donald Trump's kryptonite, and that's going to be where he tries to do anything to keep prices up, which is why he wants the Fed to cut rates. I don't care if you voted for him. I voted for him. I don't care if you hate him. I don't hate him, but I see him for what he is, which is a typical politician. The president has very little to do, shouldn't say nothing, very little to do with short-term price movements in stocks. Definitely not long-term. What matters in the long run is, are the businesses getting better? Did you pay a reasonable price today? Donald Trump took over a stock market that was massively overvalued. If it goes down, the left will blame him for it, and he'll cry about it and say, they didn't cut rates. The bottom line is both sides are wrong. Both sides are wrong. Okay, next one. Risk appetite among retail investors is plummeting. Retail trading activity as a percentage of total stock volume is down to 8.1%, the lowest since Q3 2024. Now, this was sent in my little Everything Money group chat by Dalton, and I think it's a good talking point, but the reason it's a good talking point for me is the history is January of 2018. That's like yesterday. Like, this is not enough. Like, I want to see, hey, show me during a really, really bad long bear market, how low did it get? How low is it getting there? As comparison, so first off, in November of 2025, just 5 months ago, it was 15%. The high in the stock mania was 11.5%. So what does this tell me? Not much. Okay. 8.1%, the lowest. I mean, fine. Guys, this is something that I see a lot, especially on Twitter. People will take a nugget and say, nobody's talking about this because it doesn't matter. Most times it doesn't even matter. This to me is not relevant. I mean, maybe it matters, but look at the time frame. It's 2018. Guys, 2018, January of 2018, we were still in the middle of a very, very healthy secular bull market run. This is not anything to write home about where I go, oh my gosh. Now, if I saw a stat going back to 1950, which obviously they probably don't have because retail investors didn't exist basically back then. I mean, they did, but I mean, I'm sure that the uptrend would be higher with the fluctuations like this. Guys, over time, more people will be invested in the stock market is my guess. And that's why the average holding time in the long run will get shorter and shorter and shorter. I think if you look at like the 1960s, the average holding time for a stock was like years, and now it's like months, if not days. I don't know what the exact number is, but there's also a lot of day trading going on, and people probably are not factoring that in when they're looking at this. So again, another idea of a stat that I feel like maybe it matters, but is it just a lot of noise that gets people excited going, oh my God, like I want to see the comments below. Let's see what the comments are. By the way, if you want to follow me on Twitter, at EMPaulG. EMPaulG. Follow me there. I go in spurts, but I'm pretty active. Okay. Perfect example of what's happening by the dip with what? Okay. How can you take risks when Trump is this unpredictable? Valid point. What is this implying? Thank you, Jim. I agree with Jim's question. What is this implying? Like, okay, cool. Like, I'm sure there's 1,000 stats that make it look like stocks. I mean, to me, that wasn't a stock. That wasn't a negative thing. I don't know. Oh, here's a good comment. I like this one. Retail isn't leaving. Retail is finally learning that survival matters more than participation. I don't think so. I don't think they're actually learning that, but I like the statement here. Retail will never learn that lesson, ever. That's what we're here to teach. We're trying to tell people, don't be the typical retail investor. Don't be the typical buy it, get scared if it falls, not look at it from a 10-year perspective. It's very hard to do, but that's what we're trying to teach on this channel. I like this one. When retail leaves, you should stay. That's where the best dealers are found. I still don't think there's great deals out there, but the idea is perfect. It's the whole idea of be fearful when other greedy. Be fearful when others are greedy, greedy when others are fearful. So some good comments there. Okay. And then finally, before we get to our stock, we're going to look at home flippers see smallest profits since the Great Recession, real estate data firm says. Guys, I made a killing in real estate in the Great Recession. Do you hear that? If you ask any other real estate firm out there, not every other one, but 98% of them, and said, how was the Great Recession for you? They would say it was awful. It was wonderful for me. That's the mentality I want you to have. I salivate at the thoughts of having that kind of market again. It probably will never happen again in my lifetime. Probably not, because that one didn't happen in nationwide ever. I'll probably never have that in my lifetime ever again. Guys, you know how I know this? I lost a friendship with somebody because of how well we did during the Great Recession. Think about that for a second. Great Recession was happening. I was buying homes to flip them, okay? Flipping during the Great Recession. That's what I was doing. And I did several deals, and I kept making 45, 50% return in 6 months, 5 months. Then I had a bad deal happen. It was 2012. I only made 27%. And I had a friend of mine call me, basically mother effing me, because he made 27% in some like 4 or 5 months. Because what happened at 50%? I said, you're never, ever going to see money invested from you to me ever again. And I bought him out of a partnership in an apartment building that was making 20+% returns. That person is now a real estate agent. I doubt he watches this channel, but isn't it ironic? Because he was so spoiled by the returns we were getting in the Great Recession that when it was finally over and we made normal returns, he was pissed. And imagine a world being pissed at 27% returns in 4 or 5 months, even call it 6 months. It's still 54% a year at the 6-month mark. Like, that was how good it was. So when I see this, I go, okay. Now, with that said, also, flipping is very hard now. I'm buying, I just went into contract today on a house. I think I'm in contract today on a house as a rental. It's already renovated. Couple needs to get out of it. I'm able to buy it, and I think it's gonna do well for me. I think it's gonna make me 17, according to my numbers, 17.67% IRR over a 20-year period. I'm very happy with that. Now, I'm not putting in all the management costs. I'm gonna do it myself with my wife. But the point is, I'm finding good rental opportunities because of mispricings and rentals. But in terms of flips, it's freaking hard out there. I'm not seeing anything in the flip market. They get gobbled up so quick. People just buy them. My stepson and my daughter-in-law just bought a house in the Cleveland area, and the house, like 8 doors away, went to sheriff's auction. So he messaged me and said, Paul, this house, and my wife's getting excited. Oh my God, Paul, there's a house available. We could buy it. We could, have my stepdaughter buy it. They can move. And I was like, this is not going to happen. They're like, oh, don't be so negative. I'm like, okay, sounds good. This is a very nice area of Cleveland, a great suburb. And if somebody has a sarcastic response to that, I'm going to punch them in the face. But it's a suburb of Cleveland where the house is probably worth $900 to $1 million, which is a really nice house in Cleveland. So somebody with money is going to go buy it. And it's at sheriff's sale, so the bank's probably going to buy it. Sure enough, within minutes, on Monday, the sheriff's sale happened and the bank bid it up to a nosebleed number. Why? Because the bank already has the note on it. They might as well buy it back from themselves and try to sell it in the market and move on from that. It's like, this is hard. It's just, back in the day, during the Great Recession, banks were literally, I closed on a house where I got a check at closing. Guys, think about that. When you usually buy a house, I paid cash for a house. And I didn't have to give any money at closing because all my credits, tax rate, everything was higher than the amount of money I was paying for the house and all the fees. I got a check at closing. That's how absurd it was back then. And it wasn't in a suburb of Cleveland that's like the hood. It was actually in a pretty decent suburb. I got a check at closing. I paid $1,500 for the house, all tax credits and everything. I ended up getting a check for like $400 or $500. Come on. That was where the money was made. The Great Recession, not when things are good. That's what we're trying to teach on this channel. You make the real money when everybody else thinks it's bad. That's what I want you to remember. Now, before we get into the company that we're going to go to today, is the market closed in a matter of minutes. The NASDAQ is down 0.9. The S&P is down 0.4. The Dow is 0.2. I think Nike was up a lot. Bitcoin. All right, Bitcoin had a surge recently. Now it's pulled back to 69,000. Gold, 4,400, guys. This thing is struggling. Gold is struggling. We did it in my video yesterday on this channel. We sat there and said, gold's in a bear market. And I said, don't care. Guys, I want you to get to the point. You don't care about price movement. What you care about is fundamentals. With gold, I don't know what the fundamentals mean. It's not an investment to me because if I buy a bar of gold, if I hold it, the only way I make money on it is if somebody else pays more money for it. Right? That's like the whole idea about Bitcoin. The whole idea of that is like, well, the market closes for it. What do I do with it? Now, gold has other uses, so I can understand the argument for its value beyond just what somebody's going to pay for it. We use it in everyday products, we use it as jewelry, etc. It's got 6,000 years of history, but not with Bitcoin. Now, with that said, I do own gold miners, and they do make money off gold, but their margin's so high that even 4,400 is a really good margin for them. So I'm good. They're still going to make tons of money. What do I care? This is what I want. This is the way I want everybody thinking. And it's a hard way to get there. But if you want to think that way, and I guarantee anybody watching right now, nobody sits there and goes, no, I don't want to think that way. Of course you want to think that way. But it's hard to. It's like, I want to be ripped with a six-pack, but at the end of the day, it's hard to go to the gym for me. So that's why I'm not that way. If I went to the gym and ate properly, unlike the Chips Ahoy cookie that I'm having right before we eat. And Tim does a terrible job of having a basket full of Oreos and Chips Ahoy cookies. And you better not get rid of those things, Tim. I want those forever. It's going to be impossible for me to be ripped completely without working out and without eating healthy. That's it. I'm sorry. It's just not going to work. Same thing. If you don't work on your mentality in investing, you're going to have the same mindset you had before. You're going to have the same mindset everybody else has. It's difficult to be different. Everybody thinks they're different. They're not. That's why we have averages. But I know that with the amount of subscribers this channel has, we can influence people to think differently. So, company that's down a lot today that we're going to analyze. Snowflake, down 7.5% today to 161. Now, I don't know if I'm going to analyze this specifically. I'm just going to go over a high level how to look at this. So first off, what jumps out at me? It's pretty interesting. Free cash flow last year, $770 million. 5-year average is $500 million. But look at their net income, negative. This reminds me a lot of Palantir. Palantir for the longest time had strong cash flow and growing cash flow, but negative net income. Why? Well, it's the way software is depreciated and put into use. When it's put into use, then it gets expense. It's a whole accounting thing. This is the real numbers. With that said, it's still selling for 72 times free cash flow. With that said, though, it's only 11.8 times sales. Now, you might sit there if you're new to the channel and say, what does that have to do with anything? Well, price to sales ratio is a great way of comparing companies within an industry. So, a company like Microsoft, similar margins, 68%, and their price to sales ratio is 9.11. Never forget. 9.11. A little bit lower than Snowflake, but guess what? Snowflake has a lot of growth potential. Let's go back to Snowflake and see what analysts are giving its, look at its revenue growth assumptions. 29, 24, 23, 22, 2019. Huge growth potential. So you have Microsoft, which still has growth potential, but not 20 to 30%. And you have Snowflake. Which one deserves a premium based on its growth rate? Of course it's Snowflake. I don't know anything about what Snowflake does for, what is it? What kind of software do they even do? Isn't Snowflake the one that Buffett invested in? Didn't Buffett invest in it at one point? Founded in 2012, Snowflake is a fully managed platform that consolidates data hosted on different public clouds for centralized analytics and governance. What the fuck does that even mean? Okay, it has to do with cloud and public and all that stuff. Guys, our community members have it as a strong sell. 5 years, it's down 22.6% from 5 years ago. All-time high was 429, but it's now at 160. And guess what? 429 December of 2020. Let me show you guys proof. Look at their revenue in 2020, 264 million. Sorry, 592 million for the previous year, 4.7 billion recently, 8 times more almost. And yet the stock is down significantly. Why? In the short run, stocks are a voting machine. In the long run, it's a weighing machine. If you don't look at this and the stock price, 400 plus 170. It was either massively overvalued here, massively undervalued here, or somewhere in the middle. Actually, it could be a lot of other things. But the point is, how can this be true? Just like the Cisco example. Cisco is the best example going back to 1990 or whatever. In 2000 to now, it just recently hit its all-time high 25 years later. Matched its all-time high from 2000. But the business is 3 or 5 times bigger in revenue, 3 to 5 times bigger in profit. Why? If you pay too high a price, you will not do well. Is that happening with Snowflake? And on top of that, look what Snowflake has done. They had 140 million shares outstanding, 300 million, 320, 328, 332, 337, 342. They are diluting shareholders at a slower pace. That's good. But these are the things that I want you to learn as you look at companies. I want you to learn these things. And by the way, if you want to learn about these key metrics, do me a favor. Be the smartest person in your friend group. Download our free cheat sheet where it explains all these metrics to you so you can understand them as you watch us, and you can be in your friend group wowing them saying, hey, I noticed that Snowflake's free cash flow is greater than its net income. Don't you guys find that interesting? And your friends will be like, what's free cash flow? And then you can explain to them what free cash flow is. As you say what I said yesterday, which is, all right, peasants, listen up here. And you are going to be the guru in the group. So download that, click the link below, download that. And guys, I will see you. We make videos here 4 or 5 days a week. I will see you in the next video. Thank you for your time.